Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good afternoon. Welcome to Halftime Report, 12 noon, halfway through the trading session. I am Reema Tendulkar. With me is Nigel D'Souza. And for the markets, back again at the high point of the day. So the Nifty is now up nearly 50 odd points. The Sensex has gained close to about 180 points. There is strength in Reliance Industries, which is now just about 4 or 5 points away from its lifetime high. An up move seen in names like Tata Motors, which is rebounding from a pretty rough ride that it's had in the last few months. Cipla is looking quite good. Kotak Mahindra Bank has got some green going for itself. So all told, this is a good-looking screen that you're currently staring at. Lifetime highs coming through on the Nifty. Hi, Nigel.
Hi, Rima. Well, yesterday we were underperforming the Asian markets. Today it appears that we're doing a relative outperformance if you take a look at some of those Asian markets. Yes, the Nifty is up with a gain of around 50 points. But the Nifty Bank in the last 4 trading sessions, that's put on more than 1,000 points. Take a look at that. Some of those Asian markets are trading in the red, while we are trading at the high point of the day. So it's an outperformance in comparison to our Asian peers. And the Nifty Bank, that's where the strong point is for the bulls, because that's up nearly around 200 points odd. It's breezing away, holding comfortably above that 28,000 mark odd. First up, let's run you through.
Let's talk a bit about the real estate space. Prop Equity has come up with a very interesting report claiming that housing projects worth 3.3 lakh rupees are stuck across India. Manisha Natarajan joins in with the key highlights from this report. Manisha?
Well, thanks. Yes, and I think the best way to describe the finding of this Prop Equity report will be India's undelivered home crisis. Projects worth rupees 3.3 lakh crore or $47 billion are stuck across India. We all know that there are big names like JP Infra and Unitech, but this figure is actually very astounding and gives you a glimpse of why the buyer confidence is so low in the country. Now, let's break these numbers up as per the report released by Prop Equity. There are a total of 4.57 lakh units which are stuck across India and are significantly behind their delivery deadlines. If I convert this number into projects, it's 1,687 projects which face a daunting construction challenge, no delivery date in sight. I think that's an important aspect to remember, no delivery date in sight. Now, 39% of these stuck projects are in the National Capital Region. Well, that's not a surprise because we do know that the maximum pain is in NCR. 1.8 lakh units, that's the value, at 1.22 lakh crore rupees are stuck in NCR alone. Majority of the stuck projects, you have to remember, are fully sold out. That's why you can feel the pain so much. But Mumbai is not that much behind. 32% of the projects, of that total number that we spoke about, 4.65 lakh units, well, 32% of these stuck projects are also in the Mumbai region, which includes Navi Mumbai and Thane. Even Tier 2 cities have over 68,000 units which are stuck and delayed. And South has actually done a little bit better. But what is the future of these stuck projects? Can they be completed with the help of big financing firms like Piramal Finance or government PSUs like NBCC? Joining me to answer that question is Sameer Jasuja, the author of the report. So, Sameer, my first question is, how delayed are these projects? Are we taking 6 months, 1 year, or they are significantly delayed?
Good afternoon, Manisha. First of all, nobody in India has ever done such a large exercise across the country to be able to cull out all the details of all the projects that have not been delivered, and these projects started and got launched from 2009 onwards. So a significant number of projects are already 8 years delayed as such. So if you start deciphering all this, this is not with respect to projects which are seeing construction right now. These projects are stalled at the structure level, or their marketing is stalled. Sales have happened and now further sales are not happening in these projects. So very hard to say when they will see the light of the day. What we see is that the government is being very proactive. The judicial system has come into place, and it's now taking developers to task by even putting them behind bars, and that is one area we're seeing, because of which we're seeing developers scrambling to try and complete these existing projects and find some way to muster up finances and trying to build execution capabilities. But these projects, please keep in mind, are still very badly stuck, and financing is very hard to come by for these projects.
All right, financing is hard to come by, so we are hoping that, either the courts are going to take an action or the likes of NBCC are going to bail out. But I've had spoken to some sources at NBCC, and they're saying that they are not likely to take up anything beyond Amrapali and perhaps JP if that comes into their fold. So, I mean, Mumbai now, we keep talking about NCR, but Mumbai number has astounded me a lot. 32% of the total figures, yet we don't hear so much about Mumbai. And all the focus is on NCR when we talk about delays. Why is it so?
Manisha, primarily because Mumbai faces a few different types of challenges. One is that, the clearances take a lot of time. There are redevelopment projects that take years and years to get started, and developers do pre-launches in those projects and then they don't get permissions. Case in point, Lokhadwala as such, first the Dhobighat project, they got permission and they sold it to Omkar, then Piramal finally launched it. It took 10 years for that project to get launched, and Lokhadwala had already done pre-launches sales way back in 2009 and 2010. That's why you see Mumbai numbers so astounding.
Okay, so are we saying that the consumer confidence or buyer confidence is likely to remain low? Sales are likely to remain low till we find a solution to all these 4.65 lakh units which are stuck?
Fortunately, we are starting to see green shoots in real estate now. We are seeing a lot of sales pick up in ready projects and also projects which are actually getting completed. So there is a large number of projects where developers, reputed developers, are launching new projects and completing their past projects, because the maximum launches that were witnessed in India were between 2010 to 2012. So they are nearing completion now, and those projects are seeing robust sales because there is so much consolidation that has happened in the market. You could say probably in NCR, 90% of the developers have got wiped out, and they are never going to be coming back to be able to sell any projects because they've just not been able to create any kind of credibility in the market. So consolidation is happening, fewer developers are launching, branded developers are doing well, and that's how it's going to move forward.
All right, so that's actually good news for listed players. Sameer Jasuja, thank you so much for joining me. And back to you, because, if you look at the numbers which have come out, whether it's Prestige or Shobha or Oberoi Realty, the figures are not looking bad at all. The big gainers are the listed players and branded players. Back to you.
Okay, all right, Manisha, thanks so much for joining in and running us through that interesting report then. By the way, just take a look at the Nifty. We were holding with gains and we're just building onto those gains. Cipla is moving higher as we speak. Even Sun Pharma. So a couple of these stocks, these pharma stocks, they're moving higher. But I think the reason that we have got that leg up is because Reliance Industries has hit the 1200 rupee mark. So you pull up the intraday chart of Reliance Industries, it's a 1200 rupee stock now. That's moved to the high point of the day, helping the Nifty as well.
And that would put it just about 3 rupees away from its lifetime high. So the lifetime high on Reliance was 1,203 rupees, which it hit on 1st of August. So now just a whisker away from reclaiming that yet again. But that's pushed up the market just in the last few minutes.
Sensex yet again at a record high. So that's good news, actually. Currently, the Sensex has hit a double century. The Nifty was already holding with a gain of around 200 points odd, and the Sensex moved to the high point of the day, and yet another record high for our markets. But Ashok Leyland, that's the start today. That's surging in trade after the management raised its volume guidance to around 15%. We spoke to Mr. Vinod Dasari, the MD of Ashok Leyland. He says he could expect a 30 to 40% growth in the CV industry in the coming year. Let's hear him out.
I was revising the growth norms from about 10% that I had previously stated, that I think we will grow at least by 15%. Next year will be 30 to 40% growth, in my opinion. You will see 2 launches happening from us. The first one will be in end of this quarter, which will be the world's first 5-axle truck that can now carry that can now lift 4 tires. It's never been done anywhere in the world before. So we are launching that. We had showcased that. So that will change the industry dynamics quite a bit and give us substantial revenues and hopefully market share also.
Okay, in fact, let's take the story forward with a CV financier. We're talking about Shriram Transport. To discuss this in greater detail, we're now joined by Umesh Revankar, the MD of Shriram Transport. Good afternoon, Mr. Revankar, and thanks so much for joining in. We spoke to you very recently, and at that time you indicated that the demand is very good and you're confident about maintaining your AUM growth at 18 to 20% this year compared to the prior year. We just heard Ashok Leyland's Mr. Dasri, where he's indicated a 30 to 40% growth in the CV market for next year. Is the demand outstripping, your own expectations compared to the start of the year? And give us your projections, not just for this year, but even for the next year.
See, my expectation is that the overall sales growth should happen from September onwards, when the demand for mining and infrastructure activity will be very high. So the heavy vehicle demand will start from September, and it could be in a double digit, 15 to 20%. And the sale of a smaller vehicle, that could really go very high, mainly because what happens is when the heavier vehicle gets launched, the redistribution vehicle demand also will come, but it will come at a lag, maybe lag of around 6 months or 1 year. So I think the smaller vehicle number will grow much faster, and it could be around 20%. So since we are basically in used vehicle financing, and incidentally we finance new vehicle also, we expect around 20% growth this year, and next year also we expect strong demand. I probably say that around a 20% growth next year also, and that should be coming from both urban and rural markets.
Right, Mr. Revankar, you had joined us earlier and you said there was a bit of a slowdown in Q2 for new vehicles. That's a seasonal factor that's playing out, or was it because of other reasons?
No, it's only seasonal factor in July and August.
Okay.
And also the other factor is the confusion on the axle weight ratio.
True.
Which there was no clarity in the beginning, and there were some suggestions that the manufacturers may have to redesign their vehicle and then only they'll be eligible. So we felt that if there is a time taken by manufacturer to redesign, there could be some delay. But now customers are not really looking at redesigning, and I think the existing vehicle also will be able to take that additional load. So I feel there should not be much disturbance in the demand, but the seasonal factor of rains will play on this mining and infrastructure segment.
Okay. Given the demand is so strong, does it leave you with more pricing power? Will you be able to pass on the entire cost of borrowing to your customers? The last time when we spoke to you, you said the cost of borrowing has gone up by 50 basis points, or there have been 50 basis points of rate hike, but the lending rate from your end has only gone up by 20 basis points, which means up until now you could not pass on the entire amount. Now the demand is looking so good. Are you more optimistic you will be able to pass on the higher cost?
See, as of now, there is not much of increase in our cost of borrowing. We expect for the year, next year, if you look at, there could be some increase in the cost of borrowing, which we would be able to pass on to the subsequent contract. So if you look at Q on Q, first quarter to previous quarter, then our cost of borrowing has gone up only by 5 to 10 basis points. So we did not have much challenge in the first quarter. But going forward, by looking at the way trends are, there could be increase in borrowing cost, and which we will be definitely pass on, because when there's a strong demand, then definitely the customers would be able to pay if there is a good income for his business.
Okay, Mr. Revankar, you are telling us that demand is strong. We heard earlier today as well, the management of Ashok Leyland, they upped their guidance as well. Possibility of you outbeating that 20% that you're talking about? And also, what is your cost of borrowing? If you could give me the exact number.
Our cost of borrowings is around 9% now,
Okay.
Including the wholesale and retail.
Okay.
And we expect it to go up by around 20 basis points. And demand, yes, if there is a strong demand, then we will be growing. We should be able to grow beyond 20% also.
So there's a possibility.
Here is a possibility because we have built infrastructure. Our infrastructure network and the number of branches we have added to 70 in the last 1 year. This should help us to manage the volume.
Okay, so minimum 20% AUM growth for your company in FY 19 and 20. One final question then from my end. What could be the extent of asset quality improvement for you?
Asset quality improvement should be 50 basis point overall if you look at IGAP, because we now need to look at the numbers on IGAP. As on gross NPL around 50 basis point, we are very confident. On credit cost per se, again, we expect around 40 to 50 basis point on the credit cost.
Okay, and this is by end of FY 19?
Yes, by end of FY 19.
Okay, all right. Thanks so much, Mr. Ravankar, for joining in and giving us all those details. By the way, before we slip into a short break, a couple of stocks here to pull up. Strides, those numbers didn't look very, very great. The stock was down nearly 3% when we started off the show around 20 minutes back. Just take a look at the intraday chart. That stock has spiked up. And the other one I'm looking at is HEG. In the final hour of trade yesterday, the stock was down nearly around 8.5 to 9%. I did a quick check, and in fact, the stock had moved to sub the 3,800 levels. From yesterday's low, the stock has given you returns of nearly around 17 to around 18%. So that was a big opportunity, actually, because now the stock is holding with a gain of around 10%. Appears that yesterday, someone just wanted to get out, and they were selling on the screen, and that's what put pressure on the stock. For the time being, big returns. From yesterday's low, it's given you massive returns. I think closer around 20% actually could be the returns from the lows that we saw yesterday.